Well, it's been a gut-wrenching week for investors, once again driven by fear and dismay in Europe and the US. So to get the latest on the markets, it's over to Jayne Edwards. Jayne.
Alan, the US and European markets staged a fairly unconvincing recovery on Friday, taking a pause from the mayhem. On Wall Street, the Dow and the broader market still had a turbulent ride through the day, but closed around 0.5% higher, while the Nasdaq gained 1%. Investors were heartened, for one day at least, by some reassuring noises out of the G20 meeting in Washington, with world finance leaders saying they'll take all necessary action to maintain stability. While the European Central Bank also showed signs of beefing up its response to the crisis, even as talk of a Greek default gained pace. It came at the end of a week which has seen the biggest share market sell-off since the global financial crisis, triggered by the downgrade of Italian debt, a bleak assessment of the US economy from the Federal Reserve, and further signs that China's economic appetite is waning. While equity markets managed to gain, the rout continued in commodity markets, with the gold price free-falling by over $100 or 6% on Friday. Gold has lost 10% this week, copper and nickel 17%, silver 26% and oil 9%. Turning to world share markets, and the losses were heavy, mostly in the region of 6 to 7%. Japan's market was the most resilient, losing 3%. Now, with news on local shares, here's Tom Elliott.
Well, as you just heard, the Australian share market endured a rather torrid week, as of course did so many other share exchanges around the world. Lots and lots of red ink was spilt over the past few days. Commodity prices took a beating. Many people are wondering whether the booming Chinese economy might soon grind to a halt, and the share market took it out on the big mining stocks. BHP was down 10%, Rio down 12%, and both Fortescue and Elliott down a whopping 17% each. The news wasn't much better in the financial sector. Now, if the Australian economy slows, and many people think it will, then bank profits will be hard to come by. As a result, the big four bank stocks all lost between 5 and 8% during the week. And in the investment banking sector, well, Macquarie Bank was down even more. Of course, the news wasn't all bad. In the takeover part of the market, well, Foster shareholders, as you will hear later on in the program, had a nice surprise. They got an increase in the bid. They'll receive just over $5.50 a share. Foster shares up 6% over the week. Other drink stocks, including Treasury Wine Estates, which was, of course, recently demerged out of Foster's, it was up on takeover speculation around 4%, and Coca-Cola Amatil up 1%, which was a good result in an otherwise terribly weak market. The Australian dollar was hit along with commodity prices. Indeed, the two things are often closely intertwined. As a result, investors sought out stocks that have a reasonable proportion of their earnings coming from overseas. One of these was CSL, up 5%, and Brambles, which also makes a lot of money in foreign markets, only fell 1%, which was pretty good when you saw what happened or consider what happened in the overall market. And in retailing, Oriton's not a stock that's in that many portfolios, but it did beat profit expectations. As a result, its share price up 9% over the week. Winner of the week is National Hire, up a whopping 76% after receiving a cash takeover offer from Kerry Stokes. Loser of the week, and there were plenty of them, was Lynas Corp, down 33% after posting a larger than expected full-year loss.